you should actually work. If you're like trading a good account, first of all, if you're actually trading, and you're learning trading, first of all, just go up and learn trading, because there's like a lot more to learn. People just want to rush up and trade. That's not how it works. There's a lot of things to learn before you actually become a good a consistent trader. Second thing, the learning process, it keeps going on. You can't just you'll spend like 1 or 2 months, 3 months in market, and you will feel like you have learned a lot, but actually you are far behind than most of them. So there's a lot more things to learn, and you will keep learning once you actually spend time in markets. And the one thing which will keep you driving is your profits, guys. Okay, a person can't keep driving in market if he is consistently making losses. So sometimes you have to if you have to survive in the market, you must have money, and if you don't have money, how will you survive in the market? So you should make profits, definitely. So that is the other goal of this channel, to teach you even if you and second thing is that if you make profits, you should know how to sustain it over the entire market. So what happens in the market is, if you make a certain amount of profit, okay, you should know that, okay, I took one trade, and then I took another trade. First trade was successful, my second trade was successful as well. Now for third trade, I have to bet less, until and unless it's not a big boy trade. A big boy trade is a different topic which I have to teach you separately. But if you are moving from one trading, if you have done good in your first trade and then you're moving to the second trade, you have to understand that you need to what I can say is in first trade, suppose you betted 50 lots, and in second trade you betted 50 lots. Okay, you can bet in second trade 50 lots as well. Okay, but if you're going for a third trade, you should bet 25 lots. Okay, generally I take two kinds of trade. Okay, there are two kinds of trade in intraday trading, not in swing trading. Swing trading, there is only one kind of trade, but in intraday trading there are two kinds of trades. Okay, generally one type of trade is called scalp. Okay, now scalp trade can be of 3 to 4 4 candles. Okay, 3 candles at max, not at max, but scalp is like a very quick move, okay, of a market. You're trying to catch a quick move of market, then that's called scalp. And you want to especially in options trading, scalping is used, because in options trading, quick moves matter a lot. Okay, quick moves given by the market matters a lot in options. So the scalping, for scalping, if you're doing, okay, you should be doing it with so that is what I will discuss the lot size later. But there are two kinds of trade in options. So one is option scalping. It's called option scalping. Okay, generally if you're trading options, then option scalping is the word used. And the other kind of trade is called big boy trade, which I have coined this name of big boy. But generally this big boy term, big boy, it refers to a long range trade. Okay, a long range trade of 2 to 3 gain levels. You got it? So it starts from 1 gain level to it goes around for 3 gain levels. So it's a long range trade. Okay, so big boy trades are the trades which you can't miss in a day. You have to take them, because that those are the trades for which suppose if in scalp, if you're risking suppose if you're risking 2:1, then in these trades you are risking your trades are 1:3 or 1:5, 1:4, 1:5, sometimes even 1:6. So these are the trades which the risk is that the same but the reward is quite higher. So you can't just lose these trades. If you make profits in the morning and you want to sustain the profits over a period of time, what you can do is, if you're trying to go for a scalp trade, first of all, if you're trying to go for a scalp trade, what I would suggest you is, see, if you're going to go for a scalp trade and you have made good profits in the morning, you can basically stop scalping. If you have see, I'll tell you how the trading is basically done. Okay, there is something very important in between which you have to remember. Is, suppose if you took a scalp trade and you made profit, then again you took a scalp trade and you made profits again. Okay, now you have to stop going for a scalp trade. If you get a third scalp trade, you have to leave it. Okay, that is where most of the people get down, drop their account. So first scalp, second scalp, third scalp, it might work, and it has worked. I've seen that third scalp works a lot of time, but you have to leave it because of loss due to repetition. Okay, many people don't know what is loss due to repetition. If a same setup runs once, twice, then the thrice, the third time, the chance of the setup of running is down. It's not that down, because definitely it's a setup, so it should work, but it goes down by 20% and in options, the chances of that setup would be 65%, and you can't trade options with 65% probability setup. Okay, you can't trade the options with those setups. You need at least 85% accuracy, above 80 accuracy to trade options. You can't put your money down the line for 65% accurate trade. Your risk to reward is not making money, guys. Your movement, risk to reward is making money, but then you can't afford to take losses, bro. Your premiums, you can't afford to take, you can't get into a good size with that trade, and neither if you have a decent size account of suppose 10 lots, you can risk definitely 1 lot in that trade, because your trade is going, but not not even 50%. I would risking 20% of my account on that trade. So of my trading capital, 20% of not of my account, 20% of my trading capital on that trade. So especially if you wait and took first scalp, second it worked, second scalp it worked, so basically third scalp, if you get an opportunity, just skip it. Go for, now you can't do scalping anymore. Now you have to go for a big boy setup. Okay, big boy setup. So big boy trades, I'll show you what is a big boy trade in this entire day. See, this is a scalp. If you are trading this, you're buying a put option here and you're exiting here. This is a scalp. If you are buying a put option here, okay, here, this, and you are exiting here, okay, then that's not a scalp. Okay, that's actually a big boy trade. Okay, not even a trade, a big boy trade, or you can call it a trade. As a simple words, you can call it a trade. Okay, if now. Oh my god, let me just change it to my normal pin bar. So now this is one of the trade. Now the other big boy trade was here, in which we go so in trades like this, bullish angle start, okay, and wave trend back. This is definitely wave trend back, and just see it. So if you're going for this such kind of trades, I would like risking my 2 lots here. Okay, now you saw this move. This is called Doro Mojo. So one ding ding ding, this is the harmony of trading. See, you see the candles, you'll get the sound, boom boom boom, that it's showing its strength. Why it's showing its strength, why this size of the candle is, it was like this and then this suddenly. It's because institutions are buying. Okay, it was a buy made by the institution here. So then then just this happened. So basically institution obviously they want money, bro. They won't even let the stock go below it once they are entered with this Doro Mojo. Well, I call it Doro Mojo, means 1 2 3, this rhythm. If you see this, this is an operator bar. Okay, this itself is an operator. Look at this. So institutions have bought this trade, and they, in buying of institution, makes a sign. Okay, institution, when they buy very aggressively, and that makes a sign, and this is the sign which it makes. So 1 2 3, and then there was this inside candle. When it broke, once it broke, 2 candles above it. So this is an inside candle, so you can enter here as well, but I have stopped taking bullish inside candles. So it's 1 and 2 here exit. So in this trade I would suggest you buying 2 lots here, one lot exit, 1 lot here and 1 lot here. So if you have taken a big two scalps, and you won in both, you made money on both the scalps. Now what I will suggest is and always take scalp with a less quantity. Okay, don't go for big quantity in scalp trades. So if you're taking like 2 scalps already, and then you should actually go for a big boy setup. So big boy setup, you will see, this is a big boy setup and big boy setup. So you'll go for 1 big boy trade. Now you can't take scalps anymore. If you're taking like 2 scalps, you can't take scalps anymore. And suppose you've like taken 50 lot scalp, then go for 100 or 150 lot big boy setup. That's how you're gonna make money. Okay, that's how you're gonna make money. So 50 lot scalp, 150 lot trade, 200 lot trade. This is how you end up making money. Otherwise it's like so 50 and then again just 150 or 200 lot. Go, this should be the difference between these 2 trades. Now forex, if I talk about forex, you should have to do the same. So 50 contracts, I'll just say 50 lots scalp, 50 lots scalp, 150 lot big boy trade. Or if you are talking about units, so let's say 1 unit consists of, so what if you have 1,000 lots? Okay, and so what you can do is you can break it into 300 lots, and mark 300 as 1 unit, 300 second as one other unit, and 300 third as another unit. So if you have 3 units, you can either place a buy from 1 unit, and you can basically risk 1 unit for scalp trades and 3 units for big boy trades, or 2 units for scalp trades and 3 units or 4 units for big boy trades. This is how the difference has to be maintained.